We think we're very well positioned for this kind of environment since our portfolio is very young. It's less than 10 years old. It has modern specs, and about half of our tenants are investment grade, and facility utilization is very high.
Joining me today is Will Eglin, Chairman and CEO of LXP Industrial Trust. So Will, how would you describe the macro operating environment for LXP today, and how are you positioned to react?
Well, right now, I'd say we're looking at an environment where we have high interest rates. There's been some concern about what's coming up with our election and other factors that may be impacting tenant demand in the industrial space. A lot of investors at this conference have been asking us about what's happening with tenant demand. We think we're very well positioned for this kind of environment since our portfolio is very young. It's less than 10 years old. It has modern specs, and about half of our tenants are investment grade, and facility utilization is very high. So our business right now is characterized by high tenant retention, and we still have pricing power with rents that are below market. So we've been able to stay full and continue to raise rents even against this sort of macro environment.
And where do you see the greatest growth potential for LXP in the second half of this year and into 25?
Well, the good news for us is we have a lot of organic growth opportunities in our portfolio. Our rents are about 24% below market. So far this year, we've raised rents about 27% on renewals on a cash basis. So that will continue to be a theme going forward with marking rents upward. And escalation structures are also improving. Overall in our portfolio, our contractual rent growth is about 2.7%, but new leases are getting signed with escalations that are more in the 3.5% to 4% area. So that's a great opportunity of growth for us in our existing portfolio. And then, of course, in our development business, we've built 14 buildings and we've leased 9. And if we can get those other 5 full, that's about 7 cents of earnings and another $20 million of EBITDA to add to the top line.
And is there a particular project or initiative currently underway at LXP that you're especially excited about in terms of the ability to generate growth and enhance shareholder value?
Well, at the moment, like many other REITs in this rate environment and in the industrial area, our shares trade inexpensively in relation to net asset value. And I think that's a function of a couple of things. If you look at our income-producing portfolio, it's being valued in the market at a very attractive cap rate from an investor standpoint, at least. And then you have assets that aren't producing EBITDA that arguably the shareholders are getting for free right now. And that's the unleased development pipeline and also our land bank. So our primary focus in terms of where we can really move the needle and create shareholder value is leasing that development pipeline and using the land bank for build-to-suit, where we can turn that into income-producing assets as well.